Korean Economic News Briefing, April 20, 2026. Good morning. Here is today's Korean Economic News Briefing. We begin with significant developments in South Korea's strategic positioning on the global economic stage. Deputy Prime Minister Koo Yoon-chul, who also serves as Minister of Economy and Finance, has announced an ambitious vision during his visit to Washington, D.C. this week. In meetings with international financial institutions, Minister Koo has proposed that South Korea should establish itself as a global artificial intelligence hub, and has even suggested that the nation could eventually host a United Nations AI headquarters. This proposal comes as the World Bank has already established an AI hub in Korea, and several UN subsidiary organizations, along with the Asian Development Bank and the Inter-American Development Bank, have begun collaborative operations here. These developments signal South Korea's determination to position itself at the forefront of the global AI revolution. Minister Koo's Washington visit has been particularly productive, with multiple strategic meetings scheduled around the G20 Finance Ministers Conference and the IMF and World Bank spring meetings. During these engagements, he has emphasized the need for global cooperation to address economic growth constraints and persistent global imbalances. He has underscored that prolonged and excessive global imbalances represent a significant risk to the world economy, making G20 coordination essential. South Korea has secured important bilateral agreements as well, with the Inter-American Development Bank agreeing to open an AI hub in Korea next year. This expansion of Korea's AI infrastructure represents a major strategic victory in the competition for technological leadership. Turning to currency markets, Minister Koo has provided an optimistic assessment of recent developments. He noted that the Korean won has stabilized significantly more than previously anticipated, with the $1 exchange rate falling to the 1,460 won range. While acknowledging initial concerns about currency volatility, Koo stated that market expectations have largely been met, suggesting that the worst currency pressures may be behind us. However, he cautioned that further stabilization is needed to fully satisfy market expectations. Let us now examine the broader macroeconomic picture. The Korean economy faces a complex set of challenges and opportunities as we move through 2026. First quarter economic data shows a positive quarter-on-quarter growth rate of 0.8%, driven primarily by robust semiconductor export performance. Year over year, the first quarter is projected to show 2.5% growth. This semiconductor-led recovery is crucial because the sector remains South Korea's most competitive global advantage. However, experts warn that the second quarter may see the full impact of Middle East tensions begin to materialize. Rising oil prices present a significant concern for the Korean economy. When combined with elevated exchange rates and persistent inflation, we face the prospect of returning to the four highs scenario that troubled markets previously. Investment banks have projected Korea's inflation rate for this year at an average of 2.4%, actually exceeding the economic growth forecast of 2.1%. This pattern suggests that nominal growth may mask underlying economic weakness. A concerning development has emerged regarding Korea's relative economic position in Asia. According to IMF calculations based on purchasing power parity, Taiwan's per capita GDP has surpassed South Korea's, reaching $98,051 this year. This represents a troubling reversal of historical rankings. More alarming are projections suggesting that within 5 years, the income gap between the two nations could exceed $10,000, with Taiwan potentially reaching $40,000 in per capita GDP while Korea would still be 2 years away from that milestone. This trajectory demands urgent attention to productivity and innovation metrics beyond traditional GDP measurements. The semiconductor sector continues to be South Korea's economic anchor. Despite challenges in the display panel industry, where demand for smartphones remains subdued and memory chip price volatility is affecting production plans, semiconductor exports provide crucial support for the overall economy. IT/OLED growth had promised to offset smartphone display weakness, but rising memory semiconductor prices have complicated that calculation. Regarding the stock market, the Kospi index continues its delicate dance around the 6,200 level. Last week, the index closed at 6,191.92 points, representing a 5.68% gain from the previous week. However, volatility remains elevated due to ongoing Middle East tensions. The unresolved U.S.-Iran peace negotiations, which are heading towards second-round talks, create significant uncertainty for global markets. Should these negotiations fail and oil prices spike above $100 per barrel, we would likely see renewed pressure on the Korean won and weakness in the Kospi. Brent crude oil prices have shown volatility, with June delivery prices recently trading around $90 per barrel after declining 9.07% in a single session. The energy market remains acutely sensitive to developments in the Strait of Hormuz, through which a significant portion of global oil passes. Any disruption to shipping through this critical choke point would have immediate and severe consequences for Korea's import-dependent economy. Regarding U.S. monetary policy, the Federal Reserve faces competing pressures. Some Fed officials, including Governor Christopher Waller, have suggested that if Middle East tensions resolve and the Strait of Hormuz remains open, the Fed could consider interest rate cuts in the second half of this year. However, the consensus appears to favor holding the federal funds rate steady at the upcoming Federal Open Market Committee meeting on April 28 to 29. The persistent inflation risk posed by continued energy price elevation argues for caution before implementing any easing cycle. South Korea's IMF director, Choi Ji-young, has provided a sobering assessment, stating that without the Middle East conflict, the IMF would have projected higher economic growth for Korea than the current 1.9% forecast. This implies that geopolitical factors alone are suppressing Korea's growth potential by roughly 1 percentage point. The IMF assumes that Middle East hostilities will conclude in the first half of 2026 and that energy production and exports will normalize thereafter. If this assumption proves incorrect, growth forecasts would need further downward revision. In the real estate sector, spring moving season has revealed significant market shifts. Seoul apartment Jaeon's listings have declined by approximately 50% compared to 2 years ago, reflecting diminished supply and changing housing preferences. Increasingly, apartment buyers are concentrating on stations near major transportation hubs, reflecting priorities for convenience and infrastructure over other factors. This trend suggests growing economic uncertainty is causing consumers to prioritize accessibility and practicality in housing decisions. The AI and advanced industry sectors offer more optimistic prospects. The government has designated 6 research and development special zones nationwide, with Gwangju's Advanced District 3 emerging as a major AI and new industry hub. These zones are attracting substantial government investment and generating employment and residential demand. The Korea Exim Bank has launched its own generative AI platform, KEXIM AI, with a 13 billion won investment to streamline lending reviews and provide customized counseling for Korean companies pursuing overseas expansion. Looking at corporate governance, the Korean Bar Association released human rights due diligence evaluations of 50 major corporations and public institutions. Hyundai Engineering and Construction ranked first, LG Electronics second, and Naver third in implementing human rights protections. Coupang, which faced data breach controversies, ranked last at 50th place. These evaluations reflect growing global emphasis on corporate social responsibility and environmental, social, and governance criteria. For investors and our general viewers, several key takeaways emerge from today's developments. First, South Korea's AI strategy offers significant long-term positioning benefits, though near-term returns depend on geopolitical stability. Second, the won's current stabilization should not breed complacency regarding currency risk. Third, semiconductor performance remains critical to economic growth but cannot alone offset broader global headwinds. Fourth, the Middle East situation remains the primary variable for Korean financial markets, making cautious portfolio positioning advisable. Fifth, real estate preferences are shifting toward transportation convenience, favoring specific locations and developments. Finally, the income gap with Taiwan warrants serious policy attention, as relative economic positioning affects Korea's global competitiveness and living standards. This concludes today's Korean Economic News Briefing. Thank you for your attention.